Of a conversation I had with R.C. Bhargav, the chairman of Maruti Suzuki, and Jamshed Dadaboy, the auto expert at Citi, on the sidelines of the Citi India Investor Conference. I began by asking Jamshed about his long-term view on the auto sector.
We are generally fairly constructive on the auto sector as a whole. We have a decided bias, I would say, for the four-wheeler names over the two-wheeler names. So our top buys in the space would be Mahindra & Mahindra, Tata Motors, Maruti Suzuki, Ashok Leyland. In two-wheelers, we like Eicher Motors for the Royal Enfield franchise. So yes, I think generally we are fairly positive on the sector.
In the last couple of months, the standout feature of the auto sector is that the new launches have done very well. Whether it's the Vitara Brezza, whether it's the Baleno, whether it's the KUV 100 for M&M. Do you think there's genuine demand pickup, or is it only the companies who are coming out with new launches that are doing well?
See, I think it's a combination of both. There is a genuine pickup in demand. There is also an incipient uptrading which is happening in the sector as a whole, and this uptrading is not something which is happening just in the passenger vehicle or four-wheeler space. It's happening across the consumer sector as a whole. So call it premiumization, call it uptrading, call it moving up the value chain. The Indian consumer is definitely moving away from what his parents or grandparents were used to. I mean, you think about the demographics of the first-time buyer. A first-time buyer is typically someone who was born probably somewhere in the early to mid-90s.
The
millennials, these guys have never experienced what it is to grow up in an environment where there was just black and white television and just, two TV channels.
Yeah.
So their preferences, their tastes, their behaviors are going to play a much greater role over the next 5-10 years, because their percent of the total working population is only increasing dramatically.
Okay, so let me pose that question to Mr. Bhargav. The thrust on premium products that Maruti had undertaken about a year back is paying off beautifully now, whether it's the Vitara Brezza, whether it's the Baleno, whether it's the Ciaz. In fact, the Ciaz has overtaken the Honda City as well in that segment to become a market leader. What have you made of how demographics are changing, and would Maruti continue to broaden its premiumization strategy in the years to come?
No, there is no doubt that there is a change in the demographics and the kind of products the younger generation is now wanting to buy. But at the same time, you must remember that the total market for cars in India has begun to expand, and we expect this growth to continue over the next several years. Our own target is to move up from about 1.5 million cars to 2 million cars by 2022 at the latest. And when this kind of growth takes place, Sonia, this growth will take place in all the segments. There were some segments in which Maruti was weak or not present earlier. For example, our earlier attempts at having a car which would compete at the level at which Honda City was selling have not been so successful. And over time, we have learned our lessons and moved up the product quality, product performance, so that we are now as competitive as anybody else. In the hatchback sector, we found that there was a great requirement of the younger generation to have a product which was more packed with modern technology and electronics than earlier products. They're willing to pay the price because they want to feel that they're driving a very upmarket kind of car. And therefore, our designers have been working on that level. The Brezza, of course, is the outcome of the fact that we were absent in the SUV sector, and this is our first attempt to get into the SUV sector.
I know you have given the overall volume growth for Maruti at about 10% for FY17. Now, I've tracked your company for very long, and I know that you generally give out a conservative guidance. So tell us, is there a possibility of, overshooting this guidance on the upside purely because of the new launches and the fact that you filled a lot of the product gaps that you had last year?
We could possibly do better than 10%, or would have done better than 12% if the manufacturing capacity was not a constraint. This year, 2016-17, we are stretching all our facilities to get even to a 10% growth. It's not within the conventional installed capacity. We will start getting some help from the Gujarat plant early in 2017, but any significantly higher growth than 10% this year seems very unlikely in the context of this constraint.
Your top picks in the sector, and maybe we can restrict them to your top 2 picks in the sector and why you like them.
Sure. Top 2 picks in the space would definitely be probably Mahindra & Mahindra and Tata Motors at this point in time. Okay. The reasons why we like them are fairly simple. Mahindra & Mahindra, very rural-centric business. Hopefully after a couple of bad monsoons, we should have decent rains, which should help the tractor business. It should also revive sentiment in rural India, and a large part of M&M's UV portfolio is quite rural-centric, or I would say small town from a demand perspective. So that's number one. Tata Motors is also something which we've liked for almost 5 or 6 odd years now. We continue to like it primarily because of the Jaguar Land Rover model cycle, which remains strong. The stock is fairly cheap at this point in time. Yeah. They've just reported very strong fourth quarter numbers with very strong margins. So we hope that that volume and margin momentum is something which would sustain over the next few quarters at least.
And any auto ancillaries that you like?
Auto ancillaries, our preferred picks at this point in time are Exide Industries and Bharat Forge.
Okay, that's Citi analyst as well as Maruti Suzuki.